now. We also did get data for new home sales. They did fall 12.8% in July. That was, however, offset by revised data for June. That was up to 728,000 from a previously reported 646,000 homes. Joining us now is Sam DeBianchi. He is the founder of DeBianchi Real Estate, and Robert Dietz, chief economist at the National Association of Home Builders. Sam, let me start with you. We did see a decline in those home sales in July, down 12.8%. This coming at a time when we have seen mortgage rates falling for several months now. Why do you think that hasn't prompted those numbers to push higher?
Well, you have to remember, this is new home sales. With existing home sales, we actually saw a uptick in that by 2.5% in July. That was obviously from the previous month. Rates, it's a great time to be buying. Rates right now for a 30-year fix, 3.55%. Last week, 3.6%. A year ago, 4.5%. So all signs point to buy. Unemployment, obviously, we have that at lows. We've got people who have jobs. We just need the inventory. We need the homes to exist. And I think we need to really focus on getting people to build homes over building apps. And I know that is a very big problem, is that we just need more people in the construction business, and which is definitely, in my opinion, a reason why new home sales have been on decline.
Robert, how do you think we should be looking at these numbers? I mean, as Sam points out, new home sales make up just about 10% of the overall market. Existing home sales were much more positive. How do you connect the dots?
Well, the trend in new home sales in 2019 has actually been fairly positive. The June numbers were marked up. Year to date, we're up about 4%. Where we're lagging is home construction. We're down about 5% on single family construction thus far in 2019. Part of it is that housing affordability reached a 10-year low late last year. Lower mortgage interest rates are helping to offset that. But home pricing has gone up. And the reason that home pricing has gone up is that lack of inventory. It's because construction costs are higher. That's connected to the labor shortage in construction. And one of the challenges for the market right now is for those younger prospective first-time buyers to be able to benefit from lower interest rates. They have to save the money for the down payment. And so the down payment remains a binding constraint on boosting both new and existing home sales.
Sam, I thought it was interesting. You're pointing out that you're seeing some of these investors getting in on the same market as first-time home buyers. Is that pushing some of these first-time home buyers out in terms of the pricing?
Yes, 100%. I mean, I'm one of them. So just fun fact, median sales price for existing homes is $280,000. That's up by about 4.3% from last year. Anywhere from that $200,000 to $400,000. I'm here in South Florida. That's my sweet spot. I'm a cash buyer. I currently own 9 homes and I Airbnb them. That same price point is for a first-time home buyer. So you have me who can come in, cash, close quickly, and then you have the first-time home buyer who they're financing. They might need 30 days, 45 days, 60 days. So it's definitely a very difficult market right now because there's so much competition. There's not a lot of inventory, and prices, again, in many areas, not all areas though, have been slowly increasing.
Robert, you know, when you talk about some of these people who have been kind of waiting out on the sidelines, even as we've seen the mortgage rates fall, what do you think will be kind of the catalyst to get them into the market? And, you know, given the data that we've gotten so far, is this kind of the tip of the iceberg? As we see rates falling lower, are we going to see those home sales numbers tick up?
Yeah, lower interest rates are definitely stimulating housing demand, and housing has had a rough patch since the end of 2018. We think we turned a bit of a local corner in April and May. Single-family permits have been rising since that time. New home sales should continue to grow. And as Sam mentioned, we got the first year-over-year gain in existing home sales in 17 months. So lower mortgage interest rates are going to help bring some of those home buyers off the sidelines, but we still face those housing affordability challenges.
Okay, and Sam, let me just get the final word to you. What do you think is the one thing we should be watching in the housing market as we head to year end?
I mean, again, I do think we're going to see more people dive in, especially the first-time home buyers. I think that, you know, it's not just home purchasing, but it's also rents. rents are a huge issue with affordability. So I do think that the more people are renting, they're saving their money, they're seeing that with these low mortgage rates, it's a great time to buy only if you can, which means you have the financial ability, you have the financial security, and you're ready, willing, and able to be buying, then 100% you should be buying in today's market.
Okay, Sam DeBianchi and Robert Dietz, Dietz, I should say. I apologize, I mispronounced your name. Thanks so much for joining us today.
Thank you.